Ladies and gentlemen, Rick Gregory here from Coldwell Banker Advantge. I hope everybody's doing well, and welcome to our next edition of our Real Momentum podcast. I'm here again with my buddy Paul Fitz from Advantge
Rick.
Lending.
Good to see you.
Good to see you too. Last time Paul and I were together, we talked about mortgage rates and the idea that, oh my gosh, is there a bubble? And you and I both went through the fact that there's no bubble. The markets are different.
Still agree.
Everything was different from back in the day. But today's focus is about rates. We have so many agents that have been with us, that they might have been in residential real estate for 5 years or less. And I do get a lot of questions from our agents about what's the direction of rates. Anybody can read the paper, look at bankrate.com or anything like that to get what's today's rate. But I think what's really important for everybody is what's the direction of rates, because we hear so much in the news about Fed and what's going on with oil prices and all these speculators. So you're a man on the ground, you're on the street, you're writing applications all the time.
Blue collar guy.
You are the blue collar guy. All right. Let's talk about rates. Where are we at? Where are we relative to the past, and where are we going?
Well, let's start with a day. Today, we're sitting about 5.5%. And a lot of people in our markets, they're freaking out a little bit. 5.5. They've never seen 5.5 before. And they think this is just the end of everything.
Right.
Oh my God, we can't sell houses at 5.5%. So I have, over the years, accumulated a few charts to kind of keep things in context. And I want to start with a historical chart. And the chart I have here today talks about...
Which is a big eye chart.
Yeah, exactly. If you just put one hand over your right, can you read for me what it was in 1840? So this chart talks about the historical relevance of interest rates, 30-year fixed interest rates in our country's history, starting in the year 1790. Yes, in 1790, even though they had wars and whatnot, they still had 30-year fixed interest rates. This chart kind of gives you a great idea of where rates have been in our country. And the truth is, as you see, the majority of the time, rates have been they've been under 6% for literally the majority of the time in our country, under 6, and even a longer, or even more to prove the point, they've been under 5.
Yes,
they've been under 6, they've been under 5, and right now we're at 5.5. Now, the worry on the street. This is the worry on the street, is we're going back to 1981. And I've heard this more than once. I've heard people talk about, we're looking at double-digit interest rates. The truth is, I don't think our economy can sustain double-digit interest rates. I think it's impossible, right? I wanted to go ahead and give you the 200-year look now, but I also want to talk about a more recent history.
Yeah, absolutely. But it is interesting as you look at the 80s, right? And then you look at the 90s and 2002, and I know we have other charts that we're going to show with everybody. And it said 2004 is 5.84%, which is higher than we are right now.
Correct.
Interesting.
And I got into the business in 99. I started doing loans at about 7.5%. They spiked up to 8%.
Sure.
I was still getting contracts. I was still doing loans for first-time home buyers. The market didn't stop. People did not stop buying houses.
So let's take a look at the last 20 years.
Sorry. This chart.
Is that the last 20 or last 40 years?
This is the last 40 years.
40 years, okay.
And significance here, if you look from the year 1981 to, I had this chart done at the end of last year, so 2021. If you look at the time frame, rates went from 17% interest, and they went all the way down to 2.5%, 2.25%. That's real interest rates. That's where they went. I want to focus on the last 2 years, but I want to come back to this.
Sure.
And by the way, anybody who's listening to the podcast, there's going to be pictures of these charts online. This is the last 2 years. And again, big boom in the housing market.
Sure, absolutely.
Lower interest rates created better affordability for people. Our market shifted too at the same time because of COVID. People decided that, hey, I can actually work from home. I have a data entry job. I can do Zoom calls. I can do everything that I need to do from home. So not only did people think about staying home more, they also thought about buying a bigger house so they could have a bigger office where they could have their podcast room. They could have everything that they needed for work purposes, stay at home, and still be a successful, part of our society, productive part of our society. However, this is what's more important than anything else. over the last 2 years, we've now seen the highest spike in interest rates that we've seen in the last 40 years. This spike from where we were at the end of 2021 to where we are today. Today we're at about 5.5. This is the highest spike we've seen in 40 years.
Well, in the shortest duration, right? Which is what causes people the consternation, the frustration, right? So if you're a seller, you're wondering what's happening with prices. If you're a buyer, you're wondering about your purchasing power.
Correct.
So it is very, very interesting because many of our agents that are with us, they've been in the business for 5 years or less.
Correct.
So if you forget about the 40-year horizon,
right,
if you forget about the last 10-year horizon, if your frame of reference and you're really focused on residential real estate has been the last 5, 7, 3 years, whatever the case may be, this is a lens for which you're looking.
That's it. That's all people. I don't want to say people are myopic, but I do want to say that people always keep the frame of reference from which they started in the business. Hey, when I got in the business, rates were at 6, then they went to 3. Now they're back at 5.5. They can use those. They can use those as part of how they sell.
Sure.
But what I want to do is help agents understand the future. And knowing what these charts look like from the past, we can still understand what the future holds. So I want to get off the last 2 years, and I want to go back to the 40-year chart. On the 40-year chart, as you can see from 1981, we are still on the down cycle. And every point on the down cycle, there was still an uptick in rates. It might not have been as big as the uptick that we've seen lately, but as long as the 10-year Treasury note doesn't break 3.25%, which it hasn't yet, as long as we still stay below that mark, we're still on the down cycle of rates. Now, even though we've seen a spike like we've had recently, we're still on the downward trend. What I want to tell agents, what I want to explain to agents, this might be the perfect time for people to actually buy their house, buy the house that they're looking for. And I know that sounds crazy because now for some folks, affordability seems a little tough. But I want to put it into context for you. Since rates have spiked up and we're still on the 40-year down cycle, it is completely logical that rates will cycle back down. And when they do, you can find that person their nice $700,000 house, $600,000 house, $500,000 house, help them buy that house now, knowing that they can refinance in the future, and they will save money. They will save as much as a car payment on some of their purchases. If they decide that they want to wait, and I'll wait till everything stabilizes. The one chart that we talked about in my office was I don't have a chart about how the affordability for houses have gone up, even though the rates have gone down. A person might be able to refinance their loan and save money on the house that they buy today. But if they wait and buy it a year from now, the house is going to go up in price, and you can't magically erase $100,000 of debt like you can drop an interest rate down. So I think this should encourage agents to understand that this might be a time that clients can go ahead and buy the house that's going to be suited for them. We've got another family member in the house, or we've had to take in our parents or whatever. Buy it now, knowing that in 12 to 18 months, when we start to see the downward trend in rates, you can refinance and then create more affordability for yourself.
So, I know you're about to run out of tape for all of these charts.
A lot of work.
But let's do this. In about 30 days, let's come back together.
Okay.
Because I'd love to be able to continue to focus on where the direction of rates so our agents know what's happening in the rate world. Every single day, clients with their credit scores, everything's going to be a little bit different at the individual level, on the individual deal level.
Correct.
But I do believe for many of our agents, if we can show this imagery, whether it be on listing presentations, whether it be in buyer consultation presentations, we've got a responsibility to make sure our agents have every bit of information that they need to be able to help their clients the best that they can. And to your point, I know some people are getting freaked out about that short-term rate bump that we're seeing right now.
Yep.
And if the Fed even continues to rise, again, I don't want to minimize what it means, but a 6% rate is not the end of the world.
No.
Is not the end of the world.
It's really the norm of life in our society.
Correct.
we will see lower rates. It's going to take a little while. You mentioned it at the top of the podcast. Oil is a big issue. And I know people are like, how does oil affect interest rates? But it's really the totality of our economy. And when people are taking money out of investments so they can put money in the gas tank, it affects everything about what we're doing. And that's just one part of the entire picture of it.
So let's do this. Let's come back together in 30 days,
Yep.
and let's continue to go through where rates are so our agents know where everything's happening.
Absolutely.
Sound good?
Yep, sounds
Ladies
great.
and gentlemen, I hope you found this valuable to history lesson with Paul and his tape. How
Red
many
tape.
rolls of tape did you go through?
Hands are tired.
I'm sure they are. Ladies and gentlemen, have a fantastic day.